Holidays. The last 3 months for this stock has been quite good actually. 3 months back it was trading at about 260 rupees and now it's at 320 rupees. Good earnings as well from the company, a top line growth of almost 26%. So looks like the holiday season has gotten off to a good start. Arun Chittilappilly, the MD of the company, joins us now to talk about that. Arun, hi, good morning. It's been a very strong quarter for you, a 26% top line growth. But can you break up this growth for us? How much of it has been courtesy higher footfalls and how much of it has been because of the higher ticket prices that you've had?
So for our quarter, the footfall growth was roughly about 7.5%, and the remaining and we had a ticket price increase effect of roughly about 12%. So all put together, and then we have much higher contributions from other revenues like F&B and merchandise sales. So that's what's contributed to the 25% growth in our revenue. So it's been a pretty nice quarter to have.
Okay, 7.5% growth in footfalls in Q2. What are the early signs of the footfall growth in the month of October, and what do you expect in the coming season? And do you maintain your full year footfall growth guidance of 3 to 4%?
Yeah, we are maintaining the same guidance in terms of footfall growth, purely because we are not sure how this quarter and the remaining quarter will pan out. Like I said earlier in my interviews, this year is kind of an aberration because we have increased our prices by about 10 to 12%, and on top of that there is a service tax impact of roughly about 14%. So there's a bit of a huge change in pricing from our end this year. So we are still waiting to see how that will pan out in Q3 and Q4. Q3 especially is highly dependent on discounted tickets from schools and college visitors. So we have to wait and see how that is going to affect our footfall. But we are still hopeful of maintaining roughly 3 to 4% footfall growth for this year, which is not bad considering the environment.
Okay, so 3 to 4% footfall growth. But can you just give us a breakup of how much you've earned from the Bangalore park and how much from the Hyderabad park, and which one is the more lucrative opportunity for you in the next 6 to 12 months?
So I wanted to correct you there. We have Bangalore and Cochin operational now. Hyderabad will be operational from next financial year onwards.
Okay.
Right now 60% of our revenues come from Bangalore and 40% from Cochin. So yes, Bangalore is contributes a lot more than Cochin does, mainly because of one, higher footfalls, and also higher average ticket price is higher in Bangalore by about 15 to 20%. So that contributes to that difference.
Okay, but could you give us the actual revenue growth that you've seen in your Bangalore park as well as in the Kochi park?
So in Bangalore park we've seen a revenue growth of roughly about 22%, and Cochin maybe about from ticket sales as I'm talking about, and Cochin may be slightly lower at about 18%.
Okay, you did mention that a lot of your earnings have come courtesy higher F&B revenues as well. What is the absolute figure as far as F&B is concerned, and how are the margins looking there? Because your overall margins have gone up substantially this time to 34%. How much of that has come courtesy F&B?
So our F&B revenues have gone up by about 40%. So that's why you see that blip in our overall profitability. Also, the mix of F&B and merchandise outlets we have tweaked for this year. So we are running some of the outlets ourselves as against outsourced. So some changes there. So that's also led to a higher revenues from F&B and non-ticketing revenues.
Okay. What was your average revenue per user this quarter, Arun?
My average revenue per user would be roughly about 800 rupees.
Okay. Would that mean that it's come down significantly on a quarter-on-quarter basis?
Yes, this second quarter is a weak quarter for us, and our average ticket prices are lower for this Q2 as against Q1. So you will see the average ticket prices are slightly lower for this quarter.
So what could the blended average look like by the end of the year compared to the 800 rupees that you've clocked in this quarter?
For the whole year, see, both the parks have different rates, so I can't. So for Bangalore, we may be closing towards maybe about 900 to 1,000 kind of average, whereas Cochin will be about 800.
Okay. You said your F&B, the spend on F&B went up by 40% in this quarter?
Yes, compared to the corresponding period in the last quarter.
So is that sustainable? And any thoughts on your margins? EBITDA margins were at 34% in the quarter gone by. Where do you see it in the coming 2 quarters?
See, there are 2 reasons why so F&B revenues will continue to expand, and that margin will continue to expand. In terms of overall profitability, what has happened in this quarter is our revenues went up by 25 to 26%, whereas our costs only went up by 16%. So that has contributed to this margin expansion. We are not sure whether it will continue for every quarter, but we are hoping to at least maintain part of it. So I think overall, we should still be maintaining roughly at our overall level. We should still be closer to 50% in our EBITDA margins by the year end.
Sorry, 50%?
Yeah, our EBITDA margin is between 46 and 50 for the whole year, and that we should be able to maintain that.
Okay, fair enough. Are you on schedule to open your Chennai park by April next year? And what are the exact costs that would be associated with it?
Again, I have to correct you. Sorry, we are opening Hyderabad in April, and yes, we hope to open on time. As of now, there are no delays foreseen. We hope to be operational by April. So FY17 hopefully will have a full impact of that park coming in as well.
Okay. Any expense that you will be incurring for these 2 upcoming parks, Hyderabad and Chennai, in the coming quarters?
So for we will be spending close to 100 crores in the next 2 quarters for Hyderabad. And Chennai, we are just finalizing on the land acquisition, so we might be seeing a small capex there in terms of the land acquisition, but it's not a significant. It won't be a significant amount in this financial year. Majority of it will come in the next year. So next year we might be spending close to about 60 to 70 crores on land acquisition and related costs for Chennai. But that project is slated to open only in 2018.
Okay. All right, Arun, we'll leave it at that. Thanks so much for joining in. So those are some important internals from Wonderla Holidays. The footfall growth stands at 7.5% in this quarter, and they maintain their full year footfall growth guidance of 3 to 4%. But let's move on to another stock, that's GS.